Was your New Year's resolution to pay off outstanding debt, especially your credit cards? Well, Ryson Matsumura is the branch manager at the Bank of Hawaii in Kapolei, and he has some tips for us. Good morning, Ryson. Thanks for coming in.
Thanks for coming.
Okay, so when we think about consolidation, what are we talking about?
Well, debt consolidation, you may want to consolidate bills that have a higher interest rate to something that might have a lower interest rate. And one way that you can do that is through a home equity loan. Home equity loans offer three major benefits. And one of the benefits to a home equity loan is that it generally has a longer maturity period. So customers have a longer period of time to pay off their debt by making smaller monthly payments. Second, home equity debt generally is tax deductible, unlike personal or auto loans. And third, home equity interest is generally lower than credit card or personal loan interest rates.
And that said, I mean, how much of a cost savings could you go through if you do debt consolidation?
Yeah. If someone has $5,000 in outstanding credit card debt at 17%, they would roughly be paying about $850 in interest annually. If that same person were to consolidate their debt to a home equity loan with a 5% interest rate, they would roughly be paying $250 in interest annually. Therefore, cost realization savings of roughly $600 to consolidate annually in savings.
So any other advice for consumers on home equity loans?
Something that we always recommend is still paying more than the minimum monthly payment. We often see people making the minimum monthly payment because of the interest rate being lower. For example, say you consolidate a car loan, and 5 years later, you need to purchase a new car. Because you've been making the minimum monthly payments, you now not only have the new car loan debt, but you have the existing car loan debt to pay on. So it's tough to dig yourself out of a hole if you're making the minimum monthly payments.
You said on a whole, though, most people are using their debit cards rather than their credit cards at this point, right?
Correct. So using your debit card is always a good way, because whatever you have in your checking account, funds you have in your checking account, is what you usually have to spend on. Versus a credit card has just a spending limit. So some people may go overboard with a spending limit.
That's right. All right, Ryson, thank you very much for stopping by. We appreciate it.
Thank you.
Of course, we're going to have this interview and some more information on our website, HawaiiNewsNow.com. You're watching Sunrise, Hawaii's most watched morning news.